I hope that no account my recordings and
Yes.
send, because
yes,
that's the only way you can catch up now.
correct.
Yeah. So today we're going to focus on amplified day trading, scalping concept, specifically looking at buy setups, right? We're going to be focusing mainly on buy setups, and then tomorrow we're going to look at sell setups. So when you are scalping, right, your directional bias is the most important, and we have covered that in deep, starting with swing trading, short-term trading, day trading, how you can get to define your bias right from the onset. When we are talking of high versus low interest rates, it gives you a directional bias. So when you are scalping now, or when you're day trading, right, you need to be in a position to see the market profiles. You need to see when is the market likely to go to the upside, when is it going to go to the downside. So looking at buy setups, the opportunities that lie in a daily candle. So there's two setups that you have to be in a position to recognize when you're looking at a market that is bullish, which is what we are focusing on. So that is basically your buy program, right? So we've got what we call offset accumulation, and we've got reaccumulation. This takes us back to swing trading and short-term trading. When market is bullish, right, it's going to the upside. That's a bullish market. The return to fair value, we refer to that as reaccumulation, right? But when a trend or a bias is established, we refer to that as offset accumulation, because price is going to trade below an old low and run stops before it runs to the upside, break a market structure, return to fair value. That's a reaccumulation, right? So in buy programs, IPDA will perform one of two price engine models. It's going to perform, I'm going to illustrate to you with dollar index and USD CAD, today's setups, what happened today. So IPDA will perform one of two price engine models. Number one, it will accumulate sell side liquidity by repricing under an old low. So a market that is bullish is going to seek sell side liquidity, as in sell stops below old lows in fair value. So sell stops will be triggered, inducing counterpart sellers to pay long entries with. We are talking of institutional traders here. Price will seek a higher short-term premium array to offset position. Offset, that means taking profits. The second engine model that is performed is reaccumulate fair value in retracements lower at discount arrays. So week long holders, a week long holder is someone who's buying and exiting a position. You buy, you exit, you buy, you exit. You're not sure of what you're doing. We refer to those people as week long holders. Now, price will seek to expand higher to a short-term premium array to offset position. That's the same thing when market is in a reaccumulating engine model. Now, before I continue, let's go to the charts so that you can see what I'm talking about. So we're talking of market that is bullish. We're together, gents, right?
Yes.
Yes.
We're talking of a market that is bullish. A market that is bullish is going to seek sell side liquidity to run to the upside. When institutional traders want to take the market to the upside, they need liquidity. That liquidity comes in the form of sell stops. People being enticed to sell when in actual fact market wants to go up. That's enticing the uninformed traders. So when you look at dollar index, today's price action and yesterday's price action, classic example of offset accumulation. And then when you look at USD CAD, we've got a re-accumulation. Now, dollar, we are bullish on dollar right now. Price is still going to go to the upside. That's the directional bias that we have. We've got a hawkish Fed. So we are looking for market to go to the upside. So Monday, you see how price traded to the downside, the expansion to the downside on Monday, right? The expansion on Monday on dollar index was basically just taking out last week's low. You see this low here?
Yes.
Price traded through that old low. Below an old low, we've got liquidity of sell stops. We've got money there. We've got liquidity of sell stops. So price ran through an old low. When it was going to the downside here on Monday, even one guy in the group sent me a message privately, said, I think dollar is going to go bearish now. And then I said, no, that's just market doing an offset accumulation. It's just going to run below that old low and then push to the upside. Now imagine how many people were trapped by the price to go to the downside. You see? This move to the downside enticed people to what? To sell. When there's more uninformed people selling, that gives the chance for the institutional traders to push price to the upside. You see? Now that's offset accumulation, price running below an old low and taking out the liquidity. Now, if we go to USD CAD, right, in comparison to USD CAD, this is USD CAD, same price action. Look at Monday on USD CAD. What did Monday do on USD CAD? Where was price? Where was price? Alec, where was price on USD CAD on Monday?
When was Monday? What was it on Monday?
Today's Tuesday, right?
Yes.
Right. Let me put my daily dividers. You see, Monday and today. See this price action. Where is price? Here. This whole price action here. Where is price in relation to your PDRA matrix?
When it opens around somewhere. Let me put too much light here.
Right.
When it opens for Monday.
Around 136.
Right. You see, when I'm asking like where is price in relation to your price action, price is in fair value, right? If you go to H4, price is in fair value, is in a discount array where you expect price to what? Find support before it pushes to the upside, right? Now, if you look at dollar index, right? Let's go to H4, dollar index. I'm going to zoom in and then control Y. This is dollar index on H4, right? This is last week, October, I think from 16 up until, this is last week's price action. The first this year. That's last week's price action. Everything up here. That's last week's price action, right? If you go to USD CAD, right, we are also on H4. This is last week's price action, this column, right? Look at the low that was formed today on USD CAD. That's the low on USD CAD this week. If you look at dollar index, This is the low on dollar index. You go back now to your institutional sponsorship. At a time when dollar is making a lower low, what do you need to see in USD CAD? What do you need to see in USD CHF? USD CAD is also supposed to make a lower low at the same time that dollar is making a lower low. At the same time that dollar is making a lower low, Euro USD should be making a higher high, right? So with dollar trading below previous week's low and USD CAD failing, struggling, it didn't even go anywhere towards last week's low. That means there was underlying strength in USD CAD. There's underlying strength. So we're talking of this price action here, right? So that's USD CAD. At a time when dollar is trading below an old low for a push to the upside. If you remember correctly, we talked about these charts here. This is reaccumulation in fair value here. This is offset accumulation below an old low. Now, when you look at USD CAD, where is fair value? We are talking of this discount array right there. You see, we've got a fair value gap. If we go to dollar index, there was a fair value gap here, but dollar pierced through that fair value gap and created a new low. The moment it was creating that low on this candle here, when it traded below that, that's your trigger of knowing that there's no way USD CAD is going to drop from where it is. There's no way. It will be a catastrophic collapse of this currency pair if it was going to run with one candle down here. Something crazy would have had to happen. So you'd have already know that, okay, dollar is running sell side liquidity under an old low at a time when USD CAD is trading in fair value. You see, I'm looking at the same time frames, both H4. If you look at USD CHF, USD CHF did run old lows. You see, if you look at USD JPY, USD JPY did not run last week's old low. Let's see, Control Y. You see, this is last week's old low on USD JPY. Price is up here. You see? So understanding offset accumulation and reaccumulation is important for your buy program if you're looking for long entries. So now let's look at offset accumulation in relation to exactly what it is. So IPDA will reprice the market below an old low. That price action that we have seen on dollar index. That repricing that's happening is to promote sell stops that will be residing there for current long holders. Sell stops for current long holders. There will be people who they've already bought dollar, but that move under an old low, if you don't have your stop loss 15 or 20 pips below that old low, you've been stopped out, and then market eventually went to your direction. So if you have a tight stop loss on dollar index when it was trading under that old low, if you have, say, a 5 pip or 10 pip stop loss under that old low, it means your stop loss was taken out before the market went up. You see? So this, in essence, engineers sellers at deep discount. People are going to be selling at deep discount, which is not ideal. The open float below the old low may also have sell stops for breakout systems that wish to sell on weakness. This model is called offset accumulation. This is what we refer to as offset accumulation. Price trading under an old low before it expands to the upside. Price trading under an old low before it expands to the upside. That's what we refer to as offset accumulation. Its primary purpose is to offset current long holders and induce more sellers at discount pricing. You see, you can't sell something that's at discount. You're going to lose. Yeah. If you sell something that is being sold at a discount price, it means you're losing. You're not making any profit in real life supply and demand. The model is seen frequently in bullish market conditions, while higher time frame institutional order flow is suggesting higher prices. Like on dollar, we are looking for long trades. Dollar is bullish. Our weekly institutional order flow is bullish. Our bias is bullish. So when you see dollar trading below an old low, you know that, okay, we are potentially having an offset accumulation. So typically offset accumulation models unfold quickly, and you must learn to anticipate them at key lows intraday, right? Price is not going to hang around that much. You see? Price is not going to hang around that much under old low. You can see how it reacted here, right? Price traded below the next H4 candle. If we go to the hourly chart, you see, it was below the old low for like 1, 2, 3, 4 hours. Then one candle just expanded to the upside and price never stopped. You see, that's an expansion. You see, that's already market showing you its intended pricing mode, that it wants to go to the upside. Last week's high are vulnerable. That's target. Last week's high. So offset accumulation, price is not going to stay below that old low for a very long time. It's just going to trade through and then it goes back to the upside. Then we've got reaccumulation, right? Reaccumulation now, IPDA will reprice the market lower to a fair value price array to provide smart money discount pricing for long entries. The market will be bullish from an institutional perspective and many times unfolds after a recent sell stop rate. The retracement lower, when market protracts to the downside, it will place pain on current long holders. That move to the downside on USD CAD. When people see dollar trading to the downside, imagine someone who was holding a long position on USD CAD. That person probably closed that position because he saw weakness in dollar. So it's like, there's no point in holding my long position on USD CAD. That happens to people who are not well informed, guys. People who are looking at your moving averages, your stochastic charts. They're not going to understand this smart money concept. So this model is called reaccumulation. Its primary purpose is to reaccumulate new longs and induce more sellers at discount price. Same applies with the offset accumulation. It's also seen in bullish market conditions at a time when higher time frame institutional order flow is suggesting higher prices. Now, what you need to understand, right? We've got what we refer to as your benchmark, right? What we refer to as your benchmark, an asset that you look at for you to decide, how am I going to trade Euro USD? How am I going to trade Pound USD? Or how am I going to trade USD CHF? In our case, dollar is our benchmark. So it's very important to know what dollar is doing when you're looking at directional bias. So when you're looking for long trades, right, your day trades or scalping positions, right, realistic objectives that you have to know is your trade duration typically is going to be like 1 to 2 hours or less because you're scalping. Pips per trade, you're looking at 15 to 30 pips on average. Your timing chart interval is going to be the 15-minute time frame if you're scalping. So the frequency of setups per week, there can be as many as 10. That is if you are always on the chart. Per day, there can be 2 to 3 setups. Per session, maybe 1 per session. London, New York, or London close, or Asia, there could be 1 setup there. Risk-reward ratio, typically 1:1. But there could be days when market expands, like what we have seen today. If market does expand while we are already in a position, then you can let it run. I was in a short position on Pound USD. I only got my 22 pips on Pound USD and I think 20 odd also people on Pound Yen. Then I exited. But eventually the market went crazy, which is something you have to learn to live with. So when you talk of offset accumulation, that's price trading under an old law as illustrated here. And then reaccumulation, price returns to fair value. There's a retracement to fair value. We'll show you some more examples of when price returns to fair value. So we've got one on USD CAD. Dollar index, that's offset accumulation. That is not fair value. So we've got price here. Now, fair value is determined by a discount array if market is bullish. Remember that, guys. If market is bullish, your fair value range is defined by a discount array. So we are talking of bullish order block. We are talking of fair value gaps. We are talking of liquidity void. We are talking of bullish breaker. You see, that's your fair value range. If you have fibs now, right? If you apply your fib tools on an expansion, fair value is going to come anywhere between 62, 70, and 79% retracement levels. That's where your fair value is going to come from. If you look at last week's expansion on USD CAD, let me just go to this here. If you look at last week's expansion on USD CAD, let's go to USD CAD. Right. So the expansion from last week is right here. That's the low to the highest point that was created. Right. That's last week's expansion. 1, 2, 3, 4. Those green candles from last week. You see that expansion there?
Yes.
Right. Now that expansion from 62% and below, that's your fair value. You can even say from equilibrium. See, that's your fair value range where you're going to be looking for long position. You see, this expansion, we've already had a retracement today. Market retraced back into fair value. What fair value was there? Fair value gap right there. That's our fair value gap. If you go to an hourly chart now, because you're going to be scalping, if you go to an hourly chart, see, this is when price was in fair value, 62% retracement level, and then boom, market pushes to the upside. Your target would have been 1.37400, and price reached that target easy. You see, from here to this level, you're talking of 75 pips. So when you have an expansion, like what we currently have now on USD CAD, you see, the expansion that we've had on USD CAD today, right? Let's just do this for class purpose. We've had the expansion from fair value to the highest point that has been created now. Why am I using this law to start my fib? Because price has found support in fair value. Remember, your fibs, you only apply them when price has found support in fair value or in premium or discount areas. So now we have had price finding support in a fair value gap. That's an expansion, you see? That's our intended pricing mode. Price is showing us its intended directional bias. Once you have done that now, from equilibrium all the way to 79%, that's your fair value range. What fair value, what discount array are here? On H4, we've got that fair value gap, right? We also have a bullish order block. You see? Then when you go to an hourly chart, right? This is now the hourly chart on USD CAD. So you'll be anticipating now price to trade to these levels here. Firstly, the fair value gap, which is right here. right? Once price is inside this fair value gap, the H4 fair value gap, then you need to trade USD CAD, right? After a positive dollar fundamental or a negative CAD fundamental, you see, while price is at this level here, that means going to the calendar. Then you see tomorrow, which is Wednesday, right? Tomorrow is Wednesday. What do we have for USD and CAD? We've got building permits, new home sales. For CAD, we've got rate decision, you see? We've got CAD, Bank of Canada interest rate decision. We also have crude oil inventories. So you already have a setup for tomorrow. You've got a price range that you anticipate price to retrace to and anticipate it to find support for a push to the upside. Because market has moved quite a lot today. Market cannot just keep going up and up and up and up. It's going to retrace at some point. That retracement now is your opportunity to jump on this train and go with the market to the upside. Chances are very high that we're going to reach 1.37800. This is this old high here. You see, chances are very high. But for price to trade to that level, it has to retrace first to collect more orders, more liquidity for it to push to the upside. Do you understand what I'm saying? And whatever I'm illustrating here, guys, it has been happening all along the past 2 weeks. You can see here we had an expansion, right? This expansion, if we had to place our fibs from here to there, this is discount. That's 62, that's 70, that's 79% retracement. And price pushed to the what? To the upside. Because it's a bullish asset. It's an asset that you're looking for market to go to the upside. Even if you look at this expansion here, because price had found support here inside this gap. If you put your fibs from here, from this low to this high, this is discount on lower time frame. Same applies here. This is the one I was illustrating on the weekly focus. This expansion from this low to this high, that's the retracement into fair value for a push to the upside. You see? So you need to be in a position to see or have a clear understanding of offset accumulation and re-accumulation. Now, it's going to help you in knowing exactly where is the market, right? Is the market bullish? Where is the market during London? Where is the market during New York session? So for your buy setups, London and New York overlap. That period from, I think, from 2 to 6 p.m., that's our overlap. All scalping should be done during the London and New York overlap period. Remember that assignment you did of defining your trading sessions. There's that section where London and New York, they overlap. That's the most ideal session for you to scalp the market because there's going to be a lot of volume. So if you're scalping, right, the duration and style of trading is so short-term in nature. We need most volatile times of the trading day to ensure we get a move. That's the overlap. There's going to be a huge amount of movement during the overlap period. There are times when using limit orders, an entry may execute outside the overlap period. This tends to happen in London lunch. London lunch is when there's a lot of fundamentals during London lunch. That's from 11 to 2 p.m. or post New York open. It is best to be actively following the market if you're going to scalp. So if you're going to scalp, you really have to be on the charts. You see, because you need to understand what is price. You're not just going to open your chart and then trade. No, you're not going to do that. You see, you need to understand how price is moving. So now, going back to our daily range, which is what we discussed, I think, 2 weeks ago, or I think last week, when the market is poised to trade higher based on higher time frame institutional order flow, in essence, we expect the open to be at or near the low of the daily range. There can be a small decline in price, right? Below the opening price and below the Asian range, you're looking for entries to the upside. You look for price to trade to a 15-minute discount array, right? When the market is poised to trade higher, you need to see price at least retrace to the downside. There's days when it's just going to open and then it runs to the upside. But in most cases, when market opens after midnight, it's going to retrace to the downside, heading into the Asian session and all the way to London open, 6 a.m., 7 a.m. That's the time. There can be a small decline. London open is going to post the initial leg higher intraday, then waits for N1 open. Already you have the candle, the daily candle being formed. When you see a daily candle really bearish at a time when you're anticipating it to close bullish, you should be smiling because it means there's opportunities in that asset. You see, it means there's opportunities. If we go to dollar index, right, then we go to the daily candle, daily chart. So this is today's opening price right there. That's today's opening price. I'm going to go to the 15-minute time frame. 8 minute, that's control. So that's our open. And we've got our Asian session all the way to 7 a.m. right there. Look, during London, price was below the Asian low. Price was below the Asian low and also below our opening price. And it was trading below. Okay, let me just maximize this. Last week's lows right there, because now we are on a 30-minute time frame. At that moment in time, this daily candle that we are seeing now on dollar, at that moment in time when price was below the opening and the Asian low, that candle was bearish. It was a red candle. And that's like 8, 9 a.m., 10 a.m. You see? London open. That's ideal conditions for you to go bullish. You see? So when you're scalping, it's very important that you are following through with the formation of the daily candle. So New York Open sees a continuation higher in price up until, say, 4 p.m. Between 4 p.m. and 6 p.m., we expect the high of the daily range to form and then end at 5-day ADR projected high. The 5-day ADR, that's the past 5 days, you just calculate their total number of pips and you divide by 5. That's your average daily range. Price will normally retrace lower and close off the high of the day. So after 6 p.m., you're going to see market trying to retrace to the downside, just like what we are seeing now on dollar index. This is 6. Yeah, this is the 6 o'clock candle. Price hasn't, we now have 2 bearish candles on the hourly chart. But if you already go to the daily candle, there's now a week. That's the retracement that's happening already. It's not going to close that strong bullish. There has to be a retracement to the downside. You see, price will normally retrace lower. That's why I always emphasize, take note of how the daily candle has closed. Now, during London Open, if you're scalping the London Open, when higher time frame institutional order flow is bullish, we anticipate London session to or London session low of the day formation. The low of the day is going to be formed during London session. The open at midnight or 6 a.m. GMT plus 2 can see a protraction phase. A protraction phase is basically a retracement lower in price. This can be scalped from the open or just above it prior to 7 a.m. Exactly what we have seen on dollar index. Prior to 7 a.m., price was below our Asian range low and also below our opening price for that day. The classic London swing low can be scalped even easier. The market retraces between 11 a.m. to 1 p.m. And this can provide long scalp entries once a discount area is reached. That's between 11 and 1 p.m. That has happened on USD CAD. Even after the IV entry point is passed, a 15-minute retracement can be entered long to scalp the remainder of London Open to 11 a.m. So London Open is crucial if you're going to scalp the market. London session is very important. So what you have to take note now is understand accumulation and reaccumulation, right? Understand when price runs below an old low for it to go to the upside in asset like, say, dollar or gold. Gold can also be a benchmark for dollar index. Gold can also be a benchmark for dollar index. So your assignment for today, gents. Okay, before I proceed to the assignment, in regards to accumulation and reaccumulation, do you have any questions?
Not
When you look at a chart, right? When you look at a chart, you need to be in a position to understand what is the chart telling you, right? I'm gonna give me a random chart. Let's just go through this. Give me a random chart. Don't give me the normal ones, the majors or whatever. Give me a random chart that we have never looked at. Danny, give me any chart that you can think of.
any chart that I can think of.
Yeah, besides our usual
Combinations.
Yeah. So we're talking of, say, minor pairs or something like that. What minor pair can you think of?
I have to check what minor pairs. Let me see what minor pairs I can get here before I give you a pair that does not exist. Let's see.
So if I go to File, New Chart, Forex, let's see, what minor pairs do we have here? We've got Pound AUD. No, we have covered that one.
I was going to say GDP and New Zealand dollar.
Pound NZD.
Yes.
Okay, let's see. Do I even have it here? GBP NZD. Okay, let me go here. Let me see if I can edit. Forex, GBP, NZD. Right, this one I've never opened it. I've never opened these charts whatsoever, so it has to start loading first. Right, so that's euro. Let's go to pound NZD. Right. So first things first, pound NZD. Right. I don't trade that pair, but if I want to have a basic understanding of its directional bias, right, you have to look at the interest rates pairing, right? You have to look at it from a macro perspective. So we've got pound, Bank of England with 5.25%. We've got RBNZ, which is 5.5%. They're two closer in terms of their difference. They only have a 25 basis points difference. So that's a low versus high, you see? That's a low versus high pairing. Pound being the one with lower rates than New Zealand dollar. So from a macro perspective, I would expect NZD to gain against the pound. You see? From a macro perspective, I would expect the New Zealand dollar to be strong over the pound. So that means we'll be hunting for bearish. You'll be selling low versus high. You are looking for selling opportunities, right? Now, I've just opened the chart. It's the first time I'm opening it. And this is the monthly chart, right? Low versus high. Fundamentally speaking, we're looking for price to go lower, all right? If you're looking for price to go lower, it means price has to trade from premium to discount. The last 3 months on this monthly chart, boom, there, market is trading off from a premium array, which is what? A bearish order block, right? You can also see right here, price traded above an old high, right? Which is what we were talking about just now. Price trading above an old low. This one is trading above an old high. This is tomorrow's class. This is offset distribution. Price trading above an old high, offset distribution, and then price move lower. So already, fundamentally speaking, I'll be looking for short opportunities on pound NZD. Those short opportunities now, they have to be backed by, say, negative news for the pound or positive news for NZD. If we do get negative news for the pound, it should move lower, right? So if we go to, say, today's price action on NZD, so we're likely to see short moves since morning, because pound had negative news in the morning, right? Somewhere here. You see, and price is inside your higher time frame bearish order block. See, so you just have now to define, say, your weekly and your daily premium arrays. Like today, you can see there, this week we had that fair value gap prior to this week's candle. This is this week's candle here, this single candle. Prior to that, there was a fair value gap there. You see?
Yes.
There was a fair value gap prior to this week's candle. So going into this current week that we have, you'd have been looking for shorting opportunities on pound NZD, right? If you go to the daily, Monday filled the gap, right? The gap was filled on Monday. If you go to H4 this morning, if you go to your calendar, right? This morning, we had negative news for pound. Claimant count change was negative. We had, unemployment change was positive. Unemployment rate was positive. But you can see all the PMIs that came after that. Even these ones here, 1030 for pound, service PMIs, negative. That then puts pressure, service PMI negative on pound. That then puts pressure on pound NZD for it to go lower. So if you're looking at this chart, prior to this morning, you'd have already been looking for price to trade into your higher time frame bearish order block. Then you'd have only needed now the fundamentals to come out negative for you to what? To sell. So when you look at on an asset that is bearish, offset distribution, price trading above an old high and then move lower. Offset accumulation, the example is right here. Let's see. Okay, this one did not really go lower, but we have this offset accumulation here. Price trading below an old low, then price move to the upside. So already you get a clear understanding of how you have to approach the market. This is a currency pair that I don't trade, but already from there I can see that, okay, I need to be hunting for shorting opportunities. That means if I'm going to scalp, I need to define my premium array. See, I've got a bearish order block. So I have to anticipate price to come into this level. If price is inside this bearish order block, I need pound news or NZD news on the calendar for me to what? To be so sure of what I'm going to be doing once price trades into that premium array, because I'm looking for shorting opportunities. The better if it's pound news and they come out negative. The better if it's NZD news and they come out positive. You see, that's how you have to approach your day trading, your scalping concept. If you're going to scalp in the market, you need to understand price from a higher time frame point of view. So that concludes our class today. Your assignment is now on Euro USD. I want you to study H4.
USD.
Yeah, I want you to study H4 Euro USD chart, right? You can see here, this is our class for tomorrow. Offset distribution, price trading above last week's high. At the same time, when dollar was also trading below last week's low, the same thing was happening on Euro USD. So I want you to study Euro USD. I want you to put your, of course, you guys, you've got the default fib tools. It does not matter. I want you to place your fibs on USD pad. Euro USD, sorry. I want you to have your fibs like this. See, like from this high, right, to the low that was formed the last H4 candle. You see how I've placed my Fibonacci tools?
Yes.
Right. I want you to do the same thing on your chart, irrespective that you are using the default. They're all the same though. The default fib tools from high to low. Once you have done that, mark out the premium arrays that are inside this range from 1, 2, 3, 4, 5. There's premium arrays in here on H4. Then you go to H1, mark out the premium arrays on H1. Inside that range that we have just highlighted, don't worry about the rest. The only range that we have highlighted on H4, mark out the premium arrays. On H1, mark out the premium arrays. Take note of how price is going to react to those arrays that you have marked tomorrow between 2 and 16:30. You see? Take note how price is going to react to those levels, those arrays that you'd have marked inside that range. So that's your assignment. We are going to go through it tomorrow evening.
Okay.
Yeah. So that concludes our class. Tomorrow we're looking at sell setups, offset distribution, and redistribution. It's based on this assignment. So it's important that you at least do the assignment and mark the premium arrays, because those are the ones that are going to make you understand. We already have offset distribution. So now we're looking for redistribution. Prices to redistribute in fair value for it to go lower. Right.
Okay.
That's pretty much about it, gents. We meet again tomorrow.
All right.
Murare mushe madziche.
I think Varun.
All right, I'm sure.
No problem. Ma video acho muna wandit this class yata vavita. Munesa ni access kaku that mentorship week 1 up until week 7.
Yeah, I think tonight Max is such a way.
Yeah, it's always good. Once Tata Road is over, you just go through the video just for for a better clarification.
All right.
Yeah. All right, gentlemen. Brother Mushan.
All right, sharp.
Thank you.
Sharp.